Apple finally hits the $3 trillion in market cap value. The magic number was 182.86. We hit it. We're now trading at 182.72. It's just a round number, but it still have climbed, Kriti, 38% since the start of 2021.
Yeah, well, it really tells you Tesla and Apple are the two index contributors, not just today, but in the entire Santa rally that we saw this week, and of course, broadly in 2021. These were the two major stocks that actually helped the S&P 500 put those double-digit gains. Of course, on a percentage basis, you saw a lot of those energy names outperform, but when you talk about those index contributors, there's really no other comparison than Tesla and Apple as really a proxy for what we're doing in this broader economy. Tesla is a proxy for that EV boom that started in October, and Apple for a proxy of just consumer spending, especially on those luxury goods.
Yep, buying stuff. I wonder also, Kriti, in your work, like how owned are these names? As if if they continue to rally, what can really bring the market down?
Yeah, well, Tesla is getting there. Apple is just a key piece of everyone's portfolio at the moment. It's kind of that really trademark value piece almost. I know it's a growth stock, but a lot of people look at it as kind of a must-have in a portfolio. Tesla is kind of the newbie here, and that Tesla is actually a tech stock, essentially, and recently classified as a big tech stock, not just in terms of their market weighting, but what they're doing here, bringing their software, bringing their engineering in-house in a way that its competitors, GM, Ford, other folks in the EV space just haven't done.
Yeah, I wonder where this leaves the rest of the FANGs. Like, are there other levels for the Facebook, the Netflix, the Googles that we have to, and Microsoft series that we have to watch out for?
Well, absolutely, but Apple is kind of different in that it does actually have a bigger macro proxy, even Tesla as well, simply now that more and more people are buying electric vehicles, you have those kind of federal tax credits as well. Microsoft is different where it kind of represents a little bit more of that business spending, that government corporate spending as well in terms of cloud infrastructure. That's going to be your major proxy there. And then Alphabet and Facebook are more of your social media names where you do start to see them a little bit more kind of in line with that risk on recovery trade. The idea here more correlated with advertising spending than anything else.
So here's what I find really interesting too, Kriti, we take more of a macro view for a second, is that this comes on a day where we're seeing, the 10-year yield, the 30-year yield up 11 basis points. Usually you would think the opposite. You see that kind of sell-off in the bond market, you would have a corresponding sell-off, in essence, in growth stocks.
Yeah, well, to your point, tech in general has worn several different hats. When it is more sensitive to those yields, as you saw for a really good chunk of 2021, you saw it become kind of have this long duration asset that it's not necessarily a must-have in an environment where the recovery trade is outperforming. But then you also have Apple, Tesla, Microsoft, these big tech names play the role of inflation hedge, play the role of kind of a haven, which is what we saw in most of 2020, pushing the stock market to a record high. So right now, it kind of seems like it's playing more of that inflation hedge haven role where you start to see actually rally alongside yields or alongside treasuries more than anything else.
Yeah, fair enough to that point. I just wonder too what kind of volatility though we can see in these quote unquote safety names as we continue to see the rise in bond yields.
Yeah, well, that's a really good point. The volatility on the broader index, you started to see only recently the VIX handle dropping below 20, but I just looked up the NASDAQ VIX gauge, which is the VXN index. You can look it up on your terminal. We're looking at a 21 handle, which is a handle we haven't really seen since early November. That really tells you a lot of the volatility in some of these big tech names and the NASDAQ broadly. Well, it's actually coming down a little bit. So some of that kind of, I don't know what the word is here, the volatility, kind of the urgency, I think is the word I'm looking for, that you saw earlier in the year when it came to these big tech names. Well, it's actually kind of calmed down a little bit now, once again, kind of reinforcing the idea that some of these big tech names, well, they're part and partial to everyone's portfolio, and that's the kind of environment or the kind of thinking we're going into in 2022.
Kriti, thanks a lot. I really appreciate you sticking on site with me for that. Kriti Gupta joining us on Apple, and I should point out again, Apple hitting that $3 trillion market cap. We are now off of that just a touch. We're now 182.51 is where we print. Bloomberg Technology host Emily Chang joins me now. We had it, though, for a brief moment, $3 trillion. It's just a round number, but I feel like it does speak to the overall enthusiasm of the market.
Absolutely, Alex. It's a round number. And yes, Apple made history, intraday history, but still we'll have to see where the market's closed. And look, going into the beginning of this year, analysts are saying they're still seeing demand outstripping supply for the new iPhone. There is no sign of demand for Apple's devices waning. And so it is certainly a testament to what Steve Jobs and Tim Cook have built in this company, a ironclad, essentially, supply chain and new devices that don't need to be totally new iterations on the original product, but just slight tweaks, slight changes year after year that keep customers buying.
Well, and then to that point, Emily, I have to wonder how much of this, if the move in Apple is kind of front-running this shift to services that they've been so desperately trying to sort of highlight and make, and how much that is still based on them just selling like a lot of stuff.
I think it's both, Alex. I mean, if you look at the breakdown, hardware and the iPhone still make up almost 2/3 of Apple's revenue. Yes, the company and revenue is shifting to services, but that's still going to take time, and it's still not even close to the amount of money that their hardware devices are bringing in. So yes, this is a software and services company, but this is still at the heart of it, at the core of the Apple, a hardware company, and that is what customers keep buying.